Welcome back to the channel. Today we're diving into the top 3 ways AI is revolutionizing finance. From predictive modeling to risk assessment and portfolio management, these innovations are changing the game. AI is starting to trickle down and impact how everyday people like you and me can potentially grow our wealth and protect our assets. So, what we're going to do today is break it down Graham Stephan style, no fluff. Just the straight goods on what this AI revolution actually means for the world of money. We're talking about how computers are getting incredibly good at spotting patterns, predicting where the market might be heading, and even helping to manage your investments with a level of precision that frankly was unimaginable just a decade ago. It's a massive shift, and like any big change, there are opportunities and things to be aware of. We'll look at how AI is making investment decisions potentially more accurate, how it's helping to sniff out risks before they become disasters, and how it's even building and tweaking investment portfolios almost on autopilot. Think of it as having a super smart, data-crunching assistant working around the clock. Is it perfect? No, nothing is. But is it a game changer? Absolutely. So, grab a coffee, maybe a notepad, because you're going to want to understand how this AI wave is reshaping the financial landscape. Let's get into it. 13. Alright, let's kick things off with the first big area, AI-powered predictive modeling. Essentially, we're talking about using incredibly smart AI algorithms to sift through mountains of data. Think news articles, social media sentiment, historical stock prices, economic indicators, company reports, you name it. An AI can process this information at a speed and scale that no human, or even a team of humans, could ever hope to match. The goal here is to find hidden patterns, correlations, and signals that might give us a clue about where the market, or a specific stock, or even an entire sector, is headed next. It's not about having a perfect crystal ball, because let's be real, nobody can predict the future with 100% certainty, especially in finance. If they could, they'd be sipping mojitos on a private island, not making YouTube videos, right? But what AI can do is significantly improve the probability of making a more accurate forecast. It's about shifting the odds a little more in your favor. Think about it this way. Traditional analysts might look at a company's earnings report and a few key economic indicators. An AI, on the other hand, can simultaneously analyze that earnings report, plus the sentiment of thousands of tweets about the company, the latest news from its competitors, global supply chain data, and even weather patterns if they're relevant to the business. This allows for a much more nuanced and comprehensive view of the potential future. This capability is leading to investment decisions that are theoretically more accurate and definitely more timely. In a market that moves at lightning speed, being able to react quickly to new information or even anticipate shifts before they fully materialize is a massive advantage. AI models can be programmed to learn and adapt as well. So, if a particular strategy isn't working or if market conditions change, the AI can adjust its approach. It's a continuous learning loop, always trying to get smarter and more effective. Next up, let's talk about AI in risk assessment. This is another area where AI is making some serious waves, and honestly, it's incredibly important. Managing risk is like half the battle in finance, maybe more. If you can't identify and manage your risks properly, it doesn't matter how great your investment ideas are, you could still get wiped out. So, how does AI help? Well, think of AI as having a kind of financial X-ray vision. It can see things that we humans might easily miss. AI systems are brilliant at sifting through enormous volumes of historical data, market crashes, company failures, periods of high volatility, you name it, and identifying subtle patterns or anomalies that preceded those negative events. These could be patterns that are so complex or so deeply buried in the data that a human analyst, even a very experienced one, might overlook them. AI doesn't get tired, it doesn't have biases in the same way humans do, though it can inherit biases from the data it's trained on, which is a crucial point we'll touch on, and it can process information 24/7. This allows for a much more proactive approach to risk management. Instead of just reacting to a crisis after it happens, AI can help to flag potential vulnerabilities or emerging threats before they escalate into full-blown problems. For instance, an AI might detect unusual trading patterns that could indicate market manipulation, or it might identify a combination of economic factors that historically led to a recession, even if those factors seem unrelated on the surface. It's about connecting those almost invisible dots. This leads to much better, more informed risk management strategies. 15. Now for our third major area, AI for portfolio management. This is where things get really interesting for individual investors, or at least where the potential for direct impact is becoming very clear. We're talking about using AI tools to help create, manage, and optimize investment portfolios. Think of it like having a super smart, always-on financial advisor that's constantly crunching numbers and looking for ways to improve your returns while managing your risk. It's pretty revolutionary stuff. Traditionally, portfolio management involved a lot of manual research analysis and periodic rebalancing by a human advisor or by yourself, if you're a DIY investor. AI is changing that by automating many of these processes and, in some cases, performing them with a level of sophistication that was previously only available to very wealthy clients or large institutions. These AI tools can continuously monitor market conditions, economic news, and the performance of individual assets within a portfolio. Based on this constant stream of information, AI algorithms can then make recommendations or even automatically execute adjustments to your asset allocation. For example, if the AI detects increasing volatility in a particular sector where you're heavily invested, it might suggest reducing your exposure there and reallocating those funds to a more stable asset class. Or, if it identifies an undervalued stock that fits your investment profile and risk tolerance, it might flag it as a potential buying opportunity. This isn't just about buying and selling. AI can help with the initial construction of a portfolio tailored to your specific financial goals, your timeline, and your comfort level with risk. You tell it what you're trying to achieve, maybe save for retirement, buy a house, or just grow your wealth, and it can help design a diversified portfolio to get you there. 15. So, there you have it. A look at 3 massive ways AI is shaking up the world of finance predictive modeling, risk assessment, and portfolio management. It's pretty clear that AI isn't just a buzzword anymore. It's a fundamental technology that's reshaping how financial decisions are made, how risks are managed, and how wealth is grown. From helping to forecast market movements with greater accuracy to sniffing out hidden dangers and even managing our investments, AI is becoming an indispensable tool. Now, is it perfect? Absolutely not. There are still challenges to address, like data bias, ethical considerations, and the potential for new types of systemic risks if everyone relies on similar AI models. But the potential benefits, increased efficiency, better decision-making, greater access to sophisticated financial tools, and potentially higher returns, are just too significant to ignore. This is a journey, and we're still in the relatively early stages, but the direction of travel is undeniable. Understanding this shift is key, whether you're an investor, a business owner, or just someone trying to make sense of their personal finances. Thanks for watching. If you found this video helpful, and I really hope you did, make sure to smash that like button, subscribe if you haven't already, and definitely hit the bell icon so you don't miss out on more insights into the ever-evolving world of finance. We're going to be covering a lot more on how technology is changing money, so you'll want to stay tuned. Got questions or your own thoughts on AI and finance? Drop them in the comments below. I read them. See you next time.